through strategies with a lot of people when they're looking at buying a house. The thing that is always comes up that I have to talk with people about is what do you get for your money? Like essentially, when your paycheck goes into your bank account, what do you get for it? Now, I have this conversation with people that have bought for the first time, investors, people maybe buying a second, a third house, a vacation home, all those kinds of things. And it usually comes around to how much they're spending for an actual down payment. Now, what do I mean when I say that? What do you get for the money when it goes into your account? When you look at your monthly payments on a house, about $10,000 down is going to drop your monthly payment about 60, 62 bucks a month in that range. Now, for the majority of people, $10,000 is a lot of money. Like $10,000 in your bank account. Think about that right now. That's a lot of money. But 60 bucks a month is not that crazy. So when I'm looking at people's debts, I'm pulling credit reports, I'm working with clients every day, I see some crazy monthly payments for things out there. It's not it's not crazy to look at somebody's credit report nowadays and see $1,000, $2,000, $3,000 in minimum monthly payments for cars, student loans, credit cards, all that kind of stuff. Well, when you take that, let's just say someone who has $1,000 a month in a minimum payments, credit cards, student loans, all that. $1,000 a month is really like financing $160,000 on a home. Now, if you're somebody who's buying for the first time, maybe the difference between you buying a house is just the debt that you have. When money goes in your accounts, what do you get for it when it leaves? Do you feel like you can't buy a house because of the payments, because you don't have money left over, because you have other debts out there? I also look at that too with people saying, hey, I have to put 20% down. I have to do it. I don't want PMI, just all the hubbub about PMI being bad, essentially. But it's a struggle to get to 20% down. Well, if you look at, hey, this car that you have, these credit cards, these student loans, those other payments that you have that are going out are affecting you way more than your house. Why don't we look at paying those debts off? Yes, we might have to pay PMI, 100, 200, 300 bucks a month if you're going really, really high property price. But it's really all about what are you getting when money leaves your account. That's the biggest thing that I think is holding back a lot of first-time buyers. It holds back a lot of people just wanting to purchase a second home, investment properties, all those kinds of things. So basically, moral of the story here, pay off your debt, pay off other stuff that you have monthly payments for, because that's going to make purchasing a home so much easier in the future.